Saurabh Gupta of Quantum Mutual Fund is joining us right now on the show. Saurabh, thanks very much for taking out the time. What's the view at at Quantum Mutual Fund? The overall outlook for the market, is it a positive stance that you're taking from here on? Is it more constructive?
Look, so our reading on the economy is rather dismal, and when we are meeting with the companies, the demand scenario is very, very tepid, both in terms of staples or discretionary. So we are a little worried on the way things are happening on the macro front. But yes, there are pockets of values that are emerging over the last 6 months. So for us as value managers, the valuation, the steep valuations are coming at prices where you can build your portfolio for long term. So yes, the valuation comfort is re-emerging, but yes, the macro headwinds is concerning us across sectors now.
We're off almost 500 points from the pre-budget levels. Do you think that this is an opportune time to put more fresh money to work? And what would the sectors be there?
Look, so we not going by the markets, but yeah, one should be very stock specific on where to put your money on. Some sectors are clearly on cyclical downside, but yes, the valuations are emerging. So two-wheelers is one of the sectors where we believe a lot of value lies, and then building materials is another sector where a lot of value lies. And over the last 6 months, what we have seen is that the non-banking financial packs have fallen, and some of those are really good names which have fallen along with the weaker names, and those are the names one should bank upon, and with a maybe a +2 year kind of view, or maybe 1.5 2 years view, you can find some good names in these sectors to build your portfolio.
Saurabh, the first quarter earnings season has started on a very somber note. Revenue miss from TCS. Tomorrow, some big numbers coming out, Infosys as well as IndusInd Bank. What is your expectation this time around from the first quarter earnings?
Look, so as I said, so let me break up between the domestic and the export sectors. So within domestic, we believe we are not seeing any turnaround from a quarterly numbers perspective, because if we run through the monthly numbers of two-wheelers and other data points, we don't see a recovery that has happened. So I don't see a big positive surprise on the Q1 numbers, at least from the domestic industry. Even on the staple side, the companies have been rather tepid in guiding that, and they're talking about softness. So we don't see a positive surprise happening in Q1 as far as domestic is concerned. On the export side, yes, as you rightly highlighted, TCS has highlighted some softness in the European banking side, but generally we believe on the export side things could be in line from here on from a Q1 perspective. So what we have, it's still wait and watch when the economy starts to bottom out and the sector starts to bottom out and starts to do well, and we get a positive surprise on earnings. But we don't see a lot of positive surprises coming our way in Q1 as far as earnings are concerned.
Okay. Saurabh, you also mentioned that you could be looking at two-wheeler stocks within the auto pack, which is now witnessing a structural slowdown. The monthly sales numbers, they continue to see a downward trend, at least in the last few months. What about the four-wheelers? Valuations have come off for certain companies like Maruti, which now trades up 6,000 levels. Would you take a look there as well? Keeping in mind that the passenger vehicle space has seen a massive slowdown now.
Yeah, so two-wheelers we don't see a structured slowdown. We see a cyclical slowdown, just to correct that point. And coming to four-wheelers, yes, so here also we believe it's a cyclical slowdown. India continues to be one of the lowest in terms of per capita concentration of four-wheelers and consumption of four-wheelers, and we see a lot of opportunities for companies like Maruti. Our valuation comfort is still lower on Maruti. We believe there is still some downside left in terms of as far as valuations is concerned in Maruti. It's a great business to buy, but we'd prefer to buy it at our valuation, which is still some time away.
Anything else, particularly that you feel ahead of the earnings season could land up being a surprise disappointment, and one should probably start to pair positions there if they do have them in their portfolio, because the outlook looks slightly more bleak?
Look, so if you look at staples, what we believe is if you look at discretionaries like two-wheelers and four-wheelers, they have all corrected. They are nearing their 52-week lows. So some factor of some slowdown has already been factored in the price. But staples is one place where we don't see any impact of slowdown. So Q4 was also weak. The commentaries have been weak, but the valuations remain sky high. So we believe a further disappointment could result in stock prices correcting on the staple side. Preferably for last 2-3 years we have seen these staples are trading at 50, 60, 70 times, and we believe at this kind of slowing economy their growth rates nowhere justify this kind of valuations. So that is a pocket where the valuation and the reality gap is the highest, we believe, and that could see a reasonably good correction if there is a big disappointment.